No, I think this market does not have a lot of support right now. The things that are weighing on the market, trade issues, that's not going to be talked about probably again in any meaningful way until January. So, that doesn't bode well. The Fed, is the Fed going to move in December? That's a big thing we're looking into. And the thing that really, I think, is weighing on the markets right now is what do we look at going into next year? What does earnings growth look like? How are we affected by tariffs? How are we affected by not having all of the fiscal and tax stimulus in the market? And so I think until we see something there, we're not going to have any clarity. If you look at the technical markets, we started to break a lot of the moving averages. And so that tells us we still have some down.
We've got a big value debate coming up later on in the hour, so I don't want to take it away from that. But part of your job and part of everybody in this desk job in some ways to value stocks.
Sure.
We go on what we know, and we can kind of guess where earnings are going to be up or down 1 or 2%. We don't know what the potential, if any, impact of the tariffs is going to be. It's this great unknown.
Absolutely.
How do you factor that into any kind of modeling?
I think so. What you've seen in the last couple of weeks since we had all of the volatility on the 3rd and the 4th come in is basically that people are moving away from the companies that have a lot of exposure in China and internationally. Some of that is just the dollar strength. But I think we're going to have to start looking at individual companies and supply chain and have a conversation about what those second order effects are going to be for sure.
We're in another earnings season, Brian, and this one really isn't giving any lift to the market, despite the fact that earnings are pretty good. And we can look back to last week, and Netflix kind of blew it away, and the market just went dud after that. The point that this brings to me is that the market isn't believing past earnings. It's looking forward and saying we have a lot of doubt about the earnings picture going forward. The number one reason for that, in my mind at least, is China. There's never just one reason, but that's the big reason. And the problem there, the next meeting, if it actually happens, is end of November. G20, President Xi, President Trump may be meeting on the sidelines. It doesn't sound like much progress is going to be made there, and it doesn't sound like there's progress going to be made anytime soon. That's a problem.
So, listen, I think the market is going to go to a lot of different places here through the remainder of the year and ultimately probably end up nowhere. I think the reality of what's going on right now is a deleveraging process in the market. When you're deleveraging, seeks liquidity. The liquidity has really not been present the last couple of weeks because it's been absent of the buybacks. You'll have buybacks on the other side of earnings to provide a little bit more liquidity. But I think it's an environment where corporations and individuals are recognizing higher private sector borrowing costs, and the markets right now are focusing on quality. Companies with high leverage, high debt, those companies right now are being pared back in terms of allocations. I think Netflix is a great example of it. Today, Netflix issues
$2 billion in debt to
$2 billion in the high yield
shows.
market. Let's just take that up to $10 billion.
But the market is going to absorb it. They won't even care.
Different sentiment in the marketplace. A year ago, the market wouldn't have cared. The market seems to care in October of 2018. Since Netflix's reported earnings, it has gone straight down, and I think that has to do with the debt levels.